Hey, good morning, everybody. It's another daily market report brought to you by Mike Bjork. Today is Thursday, July 1st, and happy July. Boy, June just flew by. So I guess summer's gonna go by real quick. Anyways, just want to also give you a heads up that tomorrow I'll be going on a little bit of a vacation, but I will still try to go ahead and get this created for you for tomorrow, because tomorrow's some pretty big numbers with the job numbers. So I want to get out, but it may not look as hopefully as nice as this. But I'll do my best for you folks. All right. So let's go on to what the economic news here is. All ugly, my friends, all ugly. We got actual jobless claims that came in at 472. They were thinking it might drop a little bit, and it just went up instead. ISM, which is Institute for Supply Management, dropped a little bit. They're still showing some expansion, but it dropped more than they anticipated at 56.2. And even construction spending also came down. So as a result, stock market's down. The bond market's doing okay. Let's take a look at what the bond market's doing here. As we can see, we still have the trend, and I didn't put the line on this time around, but we're up slightly higher than where we were yesterday. Yesterday, we were up probably about 3 basis points from yesterday. We did actually touch 15 basis points higher, and now we're only about 6 basis points as of right now this morning. But you would think it would rally a little bit more, especially with all that bad economic news. So I was kind of asking myself, what's going on here? Looks like the bond market could be potentially maybe be in a overbought position. Maybe they priced it into this week. That I'm kind of not thinking might be accurate. But let's take a look here also. Remember here we got the 10-day moving average here, and then we also have the bond market here. So the difference is roughly about 0.49. So we're kind of getting pulled off here. So we could have a little bit of a correction if we're in an overbought position, reach down close to the 10-day moving average. That could bring us down a little bit, even though we're having bad economic news, and typically that would help us. But sometimes they have to correct. But let's take a look at the next screen. What I did was I did Treasuries here, and look at the big difference here. There's a much greater difference from the 10-day moving average to where it is here, and that's 1.53 difference. So what's going on is that we got the equity markets. People typically put it into the mortgage-backed securities. So when there's bad economic news and equity markets don't like it, they pull it out and go into mortgage-backed securities, which is a safer investment. But Treasuries is the safest investment. So instead of putting it into mortgage-backed securities, which will help our interest rates, they're putting it into the Treasury, which is even more conservative and a lot more protect them a lot more. That's why I tell people, it just ceases to amaze me that a lot of people in my industry as a loan officer, been doing this 20, 30 years, they still look at the Treasury as their main focal point for looking at interest rates. But sometimes these go in different directions. As you can see, this is what you would think if you're following the Treasury, you would get a bigger jump in your interest rates, but it's not the case. So it's really important that you work with somebody that really knows what's going on here, what to be looking at, because it could cost you a lot of money in the long term. There's times where the Treasuries go down and the mortgage-backed securities are going up, and again, it could cost you money. So be selective who you work with. Use that as one of your questions when you're interviewing the loan officer. What drives interest rates? Many times you'll get some people, again, you'll be amazed, people have been in this for a long time, 20, 30 years, they'll say, oh, the U.S. Treasuries, of course. But they're wrong. So anyways, you guys have a wonderful weekend, and I'll be in touch with you later on. Have a good day.